to Punch Card Investing, a weekly show dedicated to all things value investing. Whether it be analyzing companies, pitching ideas, or discussing moves by the best investors in the world, we're trying to get one step closer to punching an investment off of our cards. Let's get started.
I'm hyped. Are you guys hyped? Intro man always has me hyped. Always delivering.
Totally
as consistent as ever. Sorry about the delay, everyone, since we had a couple weeks there where we were without the show. You know, it's tough, especially since daylight savings has started and since Brad's move out east here in the U.S., time zones are even harder than ever. So trying to make sure we have at least a semi-full crew is kind of tough, at least until the fall again, when we fall back here in the States and everywhere that isn't Dubai. So, but before we get into today's episode, we're going to be talking about the Buffett interview that recently released on CNBC. It was a 2+ hour interview. He and Greg Abel were talking about all sorts of things while they were in Japan. And one of those things is talking about their increased stake in the Japanese holding clearinghouses. So we can talk about that. And also any other lessons we want to kind of pull out from the interview, because again, it's kind of a monster. It's a long one. So, but of course, before we do that, I have to remind everyone to like, comment, subscribe. It's all good stuff. It helps us out a lot, and it'll take our channel to the next level if we can get to that level. Get more people in this weird community that is the value investing community. That's our ultimate goal here, getting more people. And speaking of community building, I'll be in Omaha, Nebraska, come the Berkshire Annual Hathaway meeting. That's what, May 7th,
6th, I think.
May 6th. It's the weekend of so May 5th through 7th. I'll be there in Omaha, and we're going to be doing a meetup. I put out a community post here on YouTube. I've tried to post it everywhere, and so have the other guys as well. I'll be doing a meetup on the Friday before, so that's the 5th, and that'll be from 6 to 8, and all the details are in that little community post. So if you're interested and want to swing by, there'll be other folks within the Punch Card community there as well, although I'll be the only show member, but there will be other people within the community there to stop by. So definitely stop by if you happen to be in Omaha that weekend for the annual meeting, or if by chance you live in Omaha already, might as well swing by, and we can all get to know each other a bit. Since it's kind of, we want to get that personal relationship going, right? It's very impersonal sometimes with the virtual setting. So we'll try to do some more of these types of things in the future, but it seems like a good way to kick it off would be with a nice casual meetup in Omaha. So if you're interested in that, check out the community posts here on YouTube, or wherever you're tied into all of our information. We posted on Discord as well if you're there. I have an RSVP sheet that I've posted. So if you're planning on coming, just let us know so we can get a semi-accurate head count. And with that said, should we dive into it?
Well, you guys, we already have 2 in the chat that will be at the Berkshire meeting. We've got Eunice from Turkey. He's probably flying from Madison to Omaha, which is awesome. And then Jonathan Morris. So a big shout out to Eunice as well for that super chat.
Appreciate it as always. And it'll be good to see you there. And many others as well. I've had some number of folks have already filled out the RSVP sheet, so definitely looking forward to meeting you folks and or formally meeting. I feel like I've gotten to know some folks just through chats. It's very strange, I just went to a guy's wedding here that I never actually met in person, but and now I've actually gotten to meet the guy in person. He's not here. I'd wish that Karin was here, but the magic of the internet, I suppose, bringing like-minded folks together, or even not like-minded folks, though that typically gets pretty toxic. So shall we get into the Buffett interview? And I don't know if we want to start anywhere, maybe with the increased stake in the 5 biggest. I'm trying to find the area of the interview. I think it was like 7.4% of the.
Yep.
each of the companies.
Berkshire owns 7.4% of those 5 largest, he calls them holding companies in Japan.
Mm-hmm.
And one thing that was interesting to me, he pointed out the effective free cash flow yield on these businesses is like 14%. So it's pretty impressive. And he said it doesn't get any easier than that at the end of that little segment. So that was pretty interesting. I don't know if we can pull some of that up. Jack, I sent you a link to the transcript.
Yeah, I have the transcript up as well. So it's somewhat easier to find stuff because it's so long. Let's see here.
It would have been in those first couple of paragraphs, I think. Well, there's the 7.4%.
Yeah, I think is where it kind of describes it, because this is the first time they've bought in. They've already been bought in for some time.
I think like 4 years ago they started buying in. Yeah,
but just increasing the stake up to 7.4% of each of the companies. So the 5 largest. Interesting that it's a basket bet rather than just any one. Any knee-jerk reactions to this?
They got a lot of money to deploy, so that might be part of the basket.
Just increasing the stake to kind of level things out, maybe, or just find a place for this month's dividends. Place them there when you got billions coming in regularly.
And we're already well, I was just going to say we're already a couple of years or so into this investment. I think it was around September 2020 or August 2020 we got the initial news of the 5% stake in each of these companies. And I was just kind of looking back. It looks like since September 2020, all of those 5 companies are up. The worst one is up 65% and the best one's up 221% since those initial buys.
In like 3 years. Wow.
Yeah, 2.5, 3 years. So he's done very well with that initial 5%. So it's interesting to see him bump it to 7 or so, even given the run up in price a little bit.
Yep. And it was interesting where Greg was talking about the similarities between how Berkshire runs and how these companies tend to run, the long-term thinking, kind of incremental improvements. I don't know if you want to scroll down a little bit, Jack. I think it's not too much further down.
Because they talked a lot about, the kind of the politicking, like, oh yeah, we got great relationship with them and all the friendly corporate talk.
Right.
Where
right here, about the possibility of investing on future deals with them.
Yeah. An incremental opportunity that we could do. We could very much evaluate it quickly. So
are you able to make that any bigger, Jack, or no?
Probably. Yeah, I was trying to get that whole paragraph in before. Yeah, that's probably a little better. But yeah, one thing that I find, I just always kind of, you kind of have to laugh just given Buffett and Munger's ages. Like, this worked out very well so far, but we'll be in these stocks 10, 20 years. It's just funny just to see that given the context. Right. But it just shows you the mindset.
The Berkshire we.
Right, exactly.
Yeah.
So even he's 92, 93, I forget Buffett's
92,
age.
I think.
And 92, still thinking with the multi-decade mindset.
Sure.
Makes it look easy at this point.
At this point, it's pretty well ingrained.
Yeah. It's instinct.
Yeah.
Yeah. Well, should we? I think we should maybe touch on the bond element of this investment as well, because I think that's one of the more unique. That's one of the more unique things Buffett's done here, is he's kind of created quite a bit of equity out of thin air by not just buying stocks that he thought were cheap, but funding it through very low yield, like yen denominated bonds that he issued. I'm just looking back at the initial bond issue from 2020. It was 400.
Yeah, go ahead.
What's that?
Go ahead.
So it's 430 billion yen, which is at least in today's exchange rate, about $3.2 billion US dollars. That was at rates ranging from 0.17% to 1.108%. That was the coupon on those bonds that were issued.
And what month was that again? So you said September 2020?
I think they've done a few over the past couple of years, but I think most of it was around the initial purchase. And actually, just yesterday, they issued another 1.2 billion in US dollars at 1.135%. So he continues to issue these really low coupon bonds and purchase stocks where the dividend yield alone is like circa 5%. So
right, yeah, it's wild.
It's very cool.
I remember we were talking about the 0% bond issuing like around the time that was happening. It's great. It's kind of crazy. It's already been a few years since then. Time flies when you're having fun, right?
Yeah, I mean, this is one of the cool things that someone like a Berkshire can do that an individual can't, is they can issue bonds and
raise a casual few billion at 0%. Gosh, it's ludicrous.
John's got a little 007 humor in the comments, so if you want to pull that.
He says bonds, Berkshire bonds. Yeah, very good. Yeah, man, it was just a different time. The bond yields are still pretty low historically, but
what are they like? They're not 0%
anymore
now.
Yeah, they're not 0% anymore. It's just wild.
Yeah, well, I mean, in the interview, he was saying like this is basically as easy as it gets. I think is like a quote from Buffett where there's people. He was talking about Japanese individuals presumably that are buying these bonds. I guess that's effectively like 400 times earnings if it's a 0.25% bond. But he's saying they're investing their money at 0.25% per year. That 0.25% never going to grow, and he's able to buy these companies at like a 14% earnings yield, I think was the number.
Yeah.
And that 14% is very likely to grow. And I think you mentioned the dividend on average across this basket is already up like 70%.
That's right.
Yeah, no brainer in his mind.
The math really works out there.
And even if they only grow in like nominal terms, because the debt's fixed at 0%, they get a benefit there too. So, and it's billions of dollars. It's not like we're talking about a small loan of $1 million or something like that. We're talking about a large loan here.
Yes.
And that alone will, so long as we see anything like the printing we've seen, or at least if we don't see like crazy deflation or something like that over the next however many years, 10 to 20 in Buffett's words.
Do you guys know
benefit there?
How much capital is tied up in these Japanese equities? Do you know? Like how?
Well, we could reverse the math, right?
What would be a relative position size currently in the Berkshire portfolio?
Well, yes. So 7.5% of each of the market caps. I'm not sure what that be. Is that obvious? Size of Berkshire. I'll do a quick search. Size of Berkshire band portfolio. Anything? Not sure if there's a quick reference. Apparently, they hold about $1 trillion in yen-denominated debt outstanding as of today. Is that what you converted from, Tom? Or were you just looking at the initial?
I think I was just looking at the bonds from 2020.
So yeah, it's even greater now. So whatever 1 trillion converts, isn't that about almost double or triple what you said before? Or
yeah, I think I said 400 billion or so.
Yeah. So they have like double that now in debt.
Yeah. So it's somewhere in the maybe mid to high single digit billions of US dollars.
Yeah.
The position by the sound ballpark. Yeah.
So pretty hefty position.
Yeah.
Yeah. I mean, like the cost basis on Apple was about 30 billion from memory. It's a lot bigger now, but it's
And to clarify, that's just the debt that yen denominated debt that they have. So it's not necessarily the equity value, which I'd assume is much, much greater now.
Yeah, I don't know. Maybe someone can do the maths for us.
Yeah, I'd have to
what 7% of all these companies.
Yeah, that would be the quickest way. But yeah, I'm not trying to do that sort of math right now. We're live, Tom.
Never do mathematics live.
Yeah, exactly. I'm struggling there with is that double or triple? Like, yeah. either way, it's significant, probably more significant than people might have remembered, because I kind of, like we mentioned like the 0% bond issuance pretty regularly on the show, but never really think about the actual positions very much, just because it's not as touted as maybe all these larger U.S. holdings, which makes sense given that it's a U.S. company. But yeah, I wonder where Berkshire goes in the future with foreign stock holdings, especially given the size they're at. You'd wonder if they're going to be looking increasingly internationally just because of their universe of opportunities being so small. And it's only going to get smaller as they get larger. So I wonder if you'll just see over the next 50 years, is it going to be all international deals, mostly international deals, or will it still be mostly U.S.? And obviously, there'll be a leadership change, but at some point. But
well, it was interesting seeing that stake in TSM, right, and then kind of that back off, which was talked about briefly in this interview as well. I just wanted to quickly shout out Tony. Buffett has had his eye on Japanese stocks since the 90s. And Jesse mentioned, I can remember when Monish Pabrai visited Buffett and saw the Japanese, equities handbook on his desk and was going through dog-earing pages. So there's quite a bit of history here. Buffett being interested in Japanese companies.
Yeah, I think they said his last trip was about 12 years ago.
Right.
I don't know anything that happened on that trip. I'm not sure if you guys do, but he's been there before, at least. I was surprised to hear even that he was there 12 years ago.
Yeah.
I mean, he's here. He was just there, or is he still there? But that's like just going abroad in his 90s to take a look. So
yeah, little NetJets. Tom's sporting the NetJets hat.
I was going to mention that. Yeah,
I'm glad you noticed that. That was a punch card Easter egg, actually.
That's very strategic.
That's what that was. Yeah.
Yeah.
What else from this interview here? I mean, I saw one of the things that was highlighted was I think, what was the quote? It was like, I'd prefer to like lose a year of my life if it means I can eat what I want or whatever.
Yeah.
I forget the year. If I find it in the transcript, but
I can't see Buffett being a big sashimi guy.
Right.
Yeah. Here you go. And somebody told me I would live an extra year if I ate nothing but broccoli and a few of the other things all my life instead of eating what I like to eat. I would say that year off the end of my life and let me eat what I like to eat. But I don't really think it's because I think happiness makes an enormous amount of difference. And in terms of, sorry, this transcript's kind of messed up. And in terms of that, you can't measure very well in terms of longevity. And I'm happier when I'm eating hot fudge sundaes or drinking Coke or whatever it may be with, or whatever it may, hot dogs. So,
well, it's funny because it seems like both Buffett and Munger, they always use this expression. All I want to know is where I'm going to die, so I never go there, right? And Buffett is so focused on having the maximum runway for compounding. But, I mean, don't try to take away his candy, right?
Yeah, right. It is amazing how, like, he's got to be punishing himself with the daily whatever he's drinking every day, and at least what we assume he eats every day.
Yeah,
it's kind of crazy.
So that brain's burning so many calories, though. He's fine.
Yeah, maybe
it could be. Yep, it's just crazy
insane metabolism. Yeah,
yeah.
I guess it's worked well, right? So,
well, we don't know. We don't know what he'd be like if he was just on a paleo diet, right?
Yeah, he would have passed 20 years ago or something. Sadness. Yeah.
If you go up a little bit from there, Jack, you'll get to the talk about Taiwan Semiconductor. That might be an interesting one to touch on.
Sure.
It's funny. Becky was really probing him for, kind of an explicit reason for exiting Taiwan Semiconductor. He danced around it a little bit.
Yeah. So Becky Quick says Taiwan Semiconductor is a stock.
Can you pull it up on the screen or no?
That's probably a good idea. Taiwan Semiconductor is a stock that showed up in Berkshire's holdings in a big way a couple quarters, and then a quarter later, most of it was gone. Buffett says, "Yeah, that was me." Yeah, it wasn't one of the two other guys. I kind of wonder if he's just kind of sticking up for them, but we'll take his word for it. There's two.
It was big. It was big.
Yeah, it was big. It was big. There's two other people that make decisions, each one about 15 billion. But this was my decision. And I think Taiwan Semiconductor is one of the best. Well, it's the best in the field, and it's one of the best companies in the world. It's a fabulous enterprise. And Apple buys a lot of products from them. I mean, they're good and they're coming to the US. And maybe even building for one of our subsidiaries. So, maybe it's an ecosystem sort of play. But I do think there's a danger there to some. I don't have any idea. There's actually a danger of seismic action. I mean, and I like how I keep putting all the I means in there and where they're located. But that's a low probability. And
so he's talking about earthquakes.
Right. So, right. Yeah. Seismic action. And
because they're in the Ring of Fire.
Yeah. Right. Basically, yeah. So you so Becky Quick answers it for him. You reevaluated the geopolitical risk from
He kind of lobbed out one of these low probability risks, right? And then she's like, well, what are you actually getting at here?
Yeah. So he talks about the geopolitical risk, U.S. and China, and all that good stuff that we've kind of we've talked about a number of times in the past. That is an issue that makes people uncomfortable with pretty good reason, but it's hard to predict, and maybe and I guess that's just the stopping point. I guess
it's a dangerous world.
At least if we take his word for it, which seems to make sense.
The other stock sorry, go ahead, Jake.
I was going to say she kind of pressed them on Apple because they do business over there as well. And he brings up the old Apple $10,000 loyalty thing.
Right. Can't pay him to leave. Right.
Right. Which seems kind of like dodging the question, but if you had to ask me, but makes sense. I guess he's more comfortable either way. Obviously, just given the bet size, he's obviously more comfortable with Apple than he was with Taiwan Semiconductor. So yeah. Anything else on that one?
Were you going to talk about BYD, Tom, or where were you going?
I was going to go Paramount actually, but we can talk
Paramount.
about BYD. Paramount I found interesting. Becky basically got asked why they own Paramount, which he didn't. I was expecting him to deflect and say, or I was expecting him to say it's one of the other guys' stocks. I don't know, but he didn't actually say that.
No.
And it's right there. He said, well, streaming's actually not a very good business. And he just basically laid out a bunch of reasons why it's not a very good idea.
Right.
And I think Becky more or less said that. And he's like, we'll see how it works out. Something like that. I thought that was really strange.
It was good. Yeah. She's like, well, you gave us all the reasons why you don't like it. Why did you buy it? Well, we'll see what happens.
Well, we'll see what happens.
I said he was sticking up for the guys before. Yeah, maybe not.
Yeah, I don't know. But in the past, like when Amazon first landed on the 13F, I think before the 13F even came out, he said in like a short little interview, like, you guys will see Amazon in the next 13F. I just want to say it's one of the other guys, so don't ask me about it more or less. But he didn't say that with Paramount, which is weird. I would have thought that's a Ted Weschler stock if I had to guess. Just the size of the position looks like about a 10% bet of one of those guys' portfolios. And Ted's been in media type things before. So
well, it sure doesn't seem like Buffett bought it, does it?
Yeah. I think it's just weird that he didn't say that. Yeah.
Right. Yeah.
Yeah, because they were open about it with like Activision. They call it. So it seems like, again, it'd be weird that, and why would it be different here if that really is what they're trying to do?
Yeah, I don't know. I mean, they've got 15% of the company now. 15% of Paramount is what they own.
Isn't that amazing? I own 15% of Paramount, and it's like, we'll see what happens.
Well, Jason sold that it's Ted Weschler. So
he says it's for sure.
For sure.
talking to some higher level people.
That's exactly right.
Probably is the source.
Yeah.
You mentioned BYD as well.
BYD, yep.
Yeah,
build your dreams.
He said in a roundabout way it's overvalued, basically, is why he's selling it.
Yeah, he didn't explicitly say that, but yeah, that's between the lines.
Yeah. He kind of said like, I forget exactly. He basically said the capital's got better use elsewhere at this point, right? Yeah, nothing against the company or the management, but
yeah, I
like
think,
you say, Brad, reading between the lines, it's expensive.
Yeah, he said, and he's like, it's an extraordinary company,
and he said we haven't sold all of our BYD by a long shot, right? So they're trimming.
Yeah,
it's that last part. But my job is to allocate the capital and within Berkshire the way I would do it for my sister. She's actually a big shareholder.
Right.
Yeah,
so the risk reward, there's just better places for.
I think so.
Yeah.
Other highlights from the interview?
Is there anything in the chat that anybody wants us to dig into? Otherwise, I can find a few more. I did a really long Twitter thread on this interview. Let me
just one comment there quickly. The one from Matt about Wise portfolio, which is Allegheny. That was the insurance business that Berkshire bought not too long ago. So yeah, they cleared the entire portfolio except for two stocks that Allegheny owned, which was Apple and Berkshire. Found that kind of interesting.
Right. Yep, the two that they know really well.
Right.
Yeah, it was a roundabout share buyback of Berkshire, and then then they own a little bit more Apple. So.
Right. Did Becky ask if he's concerned about SRG paying the rest of their loan? No, I didn't see that come up.
Yeah, just search the transcript. No Seritage.
Becky, I guess not a Seritage fan, unfortunately.
Yeah, it gets very little exposure on CNBC.
Yes, it does.
Seritage.
Yeah. Let's see. I'm just kind of seeing.
I'm perusing the chat for anything else.
Perusing, yes.
Yes.
We got a little bit on banks actually out of Buffett. I'm not sure if you guys caught that part of the interview.
We've had all the speculation on bank buyouts and all the whatever coming to Omaha.
Yeah,
right.
Yeah, he didn't get the private jet question. Well, he denied, talking to the president directly and all that stuff that was going around.
Always the politician, Warren Buffett. He knows how to dodge.
Yeah, but he did say he's in talks with people around the president and has been for years, but he didn't really give anything specific away. But yeah, he more or less said that he identified some of those issues about how it's maturity securities or how assets in banks more generally are impacted by higher interest rates. And he said it's just not as attractive a business as he used to think it was. So that's why he got out of all of them but Bank of America over the past couple of years.
Yeah.
Or definitely over the last year.
It seems like it makes sense to sell at 0% interest rates if they have massive portfolios of low interest rate bonds.
Yeah. Right. I mean, low interest rate anything like mortgages or.
Oh, true.
Yeah.
True.
Yeah.
Yeah.
Interesting comment from Eunice there. I'm not sure if you guys caught that, but Buffett was willing to put up, I think, $1 million of his own personal money against someone who was willing to take the bet, and the $2 million would go to charity, I think was the deal. I think it was basically there'd be no depositors in the States that would lose their money from bank failure.
Correct.
This year, I think that was basically the bet.
From 1 year of when the bet is taken.
Well, that was when he was talking about FDIC, right? And government backstopping. So, right. So, depositors don't lose, just all the non-depositors paying for it.
Still the shareholders and bondholders, but not the management, except there maybe their options they own or something.
Yeah, he went on a little tirade about that, about how management should be more aligned, taking responsibility for people losing money.
Oh, that's not how that works, Brad. Come on, that's not how banking works.
Well, it's not.
He said that if a CEO messes something up like that, they should be flipping burgers for a living, basically, didn't he?
Yeah, that was impressive.
He may have even used that example. I think
that's
He said working in a factory, I think is what he said.
Oh, working in a factory. Okay, yep. I was a bit off there.
Not too far off. No offense to any burger flippers or factory workers in the chat.
Yeah. He mentioned the going back to flipping burgers. Yeah, after the big crash, no one did that.
I did. Okay.
Yeah.
So he was asked about Norfolk Southern and their response to this derailment in Ohio. He says, "I think they've handled it terribly." And it was interesting how he said, he would like BNSF to respond in a situation like that. It was either going to be Katie or Greg that immediately got on a plane and flew to where the derailment happened, drink the water, and say, we're going to do whatever it takes to restore your life as it was before this happened. And Buffett just thought it was a little bit tone deaf how Norfolk Southern responded to the situation.
Yeah. And he said they do a lot of business with Norfolk Southern, they're
right.
Well, they have to. I guess all the big railroads have to work together to make the whole thing kind of function. But he was still willing to say that pretty publicly.
He also said, he's made a lot of mistakes, right? So he tried to buffer it a little bit, but it's still pretty strong words.
Yeah.
We've probably only.
What else you got on your highlights there, bro?
We've probably only touched on 10% of the full interview, so it's on the CNBC. It's behind their paywall, but you can get a free trial to it if you look up the full interview on CNBC. The transcript's out there. That's what we're looking at now, so we can pull it up quickly. That's free if you want to read it, I guess, or do like an audio read through if you
on Squawk Pod, you can listen to the entire interview as well in 3 different parts.
Yeah. And then the CNBC has posted highlight videos as well on YouTube of what they think are the hottest takes.
Yeah. Well, I like this one. So Andrew Ross Sorkin asked, so if that's the case, are the regional banks right now, First Republics and the like, a steal from a value proposition? Right? And he was basically saying that in follow-up to Buffett saying, depositors aren't going to lose money here. So Buffett was like, no, they're not going to save the stockholder. He's talking about the depositors aren't going to lose money. But he thinks, if the shareholders are doing stupid things, if they're doing dumb things, they should be losing money. So no bailouts for the shareholders.
Yeah, it's weird that would even be slightly controversial to say. But
yeah, I don't know that it's controversial. It just kind of got maybe confused a little bit.
Yeah.
You should say no bailouts for the stockholder yet. We give it enough time.
Oh boy.
But yeah. We were kind of talking about the bailout situation with SVB a while back, which has been what? It's been, how long has it been since that happened? About a month now, right?
That was in March. That's
a month. About a month.
That would be a month. Yes, your calculations.
I know you became a dad recently.
Time's weird, right?
Your time was all blurred.
Yeah,
it's around that time, wasn't it?
Yeah. No, it's April. It's actually September in New Zealand. I don't know what you guys talking about.
All right, the
is that how it
universe.
Works?
Yeah.
Right. It was my birthday on a completely separate day recently. I mean, it's wild down there. I don't know what's going on.
Yeah.
Oh, I got this question here from Jesse asking, Jack, can you try and ask Buffett at the annual meeting if he has changed his stance on Bitcoin yet? No.
Ooh, don't do that.
No.
Jack, what would you ask Buffett if he
Oh
had the
man, I
chance?
haven't thought about this.
You're on the spot now.
Frankly, I think anything I would ask, if it was in like a public setting, I feel like it would just be either an answer we've heard or could guess, or it's going to be a very political answer. So I'm not really sure. I'd have to think.
You could do the Peter Thiel question. That might be.
Can I cross-examine him like a witness on the stand?
I don't think that's going to work, Jack.
Can I have an hour?
Yeah,
but I'm not sure.
You'd have to.
What would
you'd have
you
to
have
ask
something
him
you
something.
think? Well, go ahead, Tom.
I have a question for Charlie, because I think
he'd be more blunt.
The three of us could predict any answer to any question just about that ever get asked at this point, except maybe specific stock stuff that they haven't talked about before. But
they probably wouldn't answer if they, yeah.
Yeah, exactly. So I think you asked them a question not even related to investing. Like I read a Charlie Munger biography a couple of years ago, and it mentioned him coming to New Zealand on a fishing trip. So I would ask Charlie about that. I think if I had the chance, give me some details on that, but not sure on Warren.
Yeah, that's a good point. I probably would have gotten to something like entrepreneurial, like running a business sort of deal, rather than like the investing, just the stock stuff. Because that's we've heard everything that they would probably ever say, or could guess everything that they would say about stock investing, because it's very consistent.
The last thing you want to do is ask a question where the answer is going to be, I think 90% of people should buy the S&P 500 and go back to work, or the best investment is in yourself. You don't want those answers.
So Tom,
you'd ask a slightly different question.
You'd ask him where the fish are. Is that what you're saying?
Yeah, but literally, not stock market.
That's a pretty good one. I feel like they would like to get questions like that. Like, oh yeah, I forgot about that. Like, oh yeah, let me tell you about that. I would think because
the rest of the room would be rolling their eyes. But
they get the same questions every day, and every interview.
They only answer questions once a year, Jack. Let's be fair.
I should say every day, but you know what I mean. It's a lot of the same questions over and over, and they've gotten very good at answering those, and they're very consistent with it usually. And then whenever they say something like sort of new, that gets all the headlines. Like, oh gosh, especially all the crypto stuff. That's been like very spicy for headlines, because all the other stuff's the same.
I liked when he was asked if Powell should keep raising rates.
He said Powell's wonderful. He doesn't want to bite the hand that feeds, right?
Right.
Yeah.
He really dodged that question.
That was the politician answer.
That was good.
To rule them all.
Yeah.
He was like, Jay Powell's done a wonderful job, and Paul Volcker is my hero, or whatever.
Right. Powell should do whatever he thinks is in the best interest of the United States.
Yeah. So just kind of punted it.
He did make it pretty clear he'd hate to have that job.
Yes.
Yeah.
Very clear.
Doesn't Jay Powell get paid like
he's a multimillionaire. He's a multimillionaire for sure. I think he's like a very wealthy, like over 10 million. I forget what his net worth is.
What's his salary, Jack? Do you know?
I don't know what the Fed salaries are, but let's see.
The Fed salary, like for the job he's doing, it's kind of
Fed chair salary is 203 as of 2019.
203,000.
Yeah, and then the vice chair.
Well, that's twice as much as Buffett.
Other board members are 183.
Making, so
say again.
That's twice as much as what Buffett's making.
Yeah.
And let's see.
Well, yeah. Powell's making several $1 trillion decisions.
In 2019, his net worth was estimated to be a range of 20 to 55 million. So he's a very wealthy man. And
where did he get it from? I don't know much about his background.
Yeah, it's a great question, Tom. And now he's in this position, and it raises some eyebrows.
Okay, let's not go there then.
Okay. Yeah, sure. Okay.
I feel like Jack's had a lot of like shower thoughts about that topic.
What
did you guys think about the Buffett talking about how the price of auto insurance has gone up like 30 or 40 times, even though the risk has gone down significantly? I thought that was interesting. It's like,
well, did it go down though? Because car prices skyrocketed like way beyond what they probably should have for these past few years. It probably has something to do with it. definitely beyond inflation, I would think.
Yeah, but no, I think the 30 or 40x trend is more over like the last couple of decades as opposed to
sure.
just
But
the last couple of years.
But even so, car prices have risen during that same time. Probably, I would guess by some sort of multiple close to that. I don't know.
It seemed like what Buffett was saying here is that insurance companies, well, he said you can argue inflation is basically good for insurers, and he was kind of talking about how insurers take advantage of inflation. I thought that was like, that's interesting.
I guess the caveat there is if you can do something with the float that keeps up with inflation, because if all your premiums that are being saved up are being rotted away too, that can become a problem, right? Depending on the type of insurance. If it's a fixed cap amount, I guess maybe not. Maybe I just talked myself out of that answer. If it's fixed coverage, so I guess that would limit it.
You've been out of law school for a few years now, Jack. I can tell you.
I've never done insurance, man. I don't know. But just thinking, like, if you have like a fixed coverage, what your total possible liability should be. So, in a way, it's a debt, and inflation eats away debt. So I could see the argument that it actually does help. Is there kind of like a leveraged position, if you want to look at it that way?
Yeah, but then they've got a bunch of insurance where they've got no clue what the liability is going to be.
Right.
Like all that, hurricane insurance or.
No, but even then, there's still like coverage limits. But yeah, you never know when like one of those events is going to trigger it all at once.
They know their max loss, though, right?
Right. That's what I'm getting at.
I don't think so. I think they do a lot with. I don't think they do a lot of reinsurance, like the type of stuff where they'll say, well, maybe I might be wrong there. Maybe there's still a cap, but I know they.
Yeah, there definitely would be for property insurance.
Where if they do the type of reinsurance where if claims from a hurricane, for example, are above $50 billion, Berkshire starts covering anything in excess of $50 billion. But I don't know if there's a cap. There must be another cap, I suppose.
Yeah, who's the end of that line? We're getting back to 2008 stuff.
Yeah.
Who's the final insurer? But yeah, I see what you mean.
But Buffett wrote about that a lot in his, I think, 1980s letters about how they have, loss adjustment line items in their insurance businesses, which are an estimate of next year's losses. Yeah. And he like consistently year after year is going back and comparing the estimates versus what actually happened. And they're like, even Berkshire is wildly wrong year to year. It's kind of
I'm sure year to year it probably varies widely, but it's like over the decade or 5 years or something like that. It probably levels out, or no?
I don't know. I'd have to go back and read it. But even Buffett through those years is saying like we're trying to be as accurate and even slightly conservative as we can. And we think we should get more accurate at this over time. And then he writes next year's letter and was like, we completely screwed that up again. Sorry about that.
All right then. Yeah.
You guys, we got a super chat from Jason and a stock tip. A super chat and a stock tip.
No, not a stock tip, a stock observation.
All right, this isn't a financial advice channel here.
No, we don't provide personalized advice.
Thank you for setting me straight on that.
Yeah, we don't want to get cavalier here,
you
Brad.
Guys, is this Jason's 100 bagger or 1,000? Did he say 1,000 bagger?
For Cardlytics?
Well, he's been pumping.
You say that like he's only got one, Brett.
Yeah.
Well, the one he's been talking about.
Okay.
Keep an eye on Cardlytics for the next 3 weeks. You never know.
Yeah.
The climb might be steep. That's what according to Jason.
Yeah, Jason probably knows this, but has anyone that we sort of follow 13FYs recently got into Cardlytics? I know there's certainly been people in it in the past.
For a while, I thought. Who was that?
Cliff Soson's been in it for a long time.
Okay, yeah, that's who I'm thinking.
I think I could be wrong. I want to say Brian Lawrence was maybe in it for a little bit. Could be wrong. Matt Peterson actually was in it for a little bit. He wrote that in a letter.
Data Roma says Cliff Soson's the only one.
Just Cliff Soson, yeah.
Okay. Interesting.
Yeah, not seeing any others that have flags.
Yeah, I know very roughly what they do, but
can you tell us what that is, Tom?
That's about it. Well, yeah, they basically, I think they offer the technology behind advertising in like bank apps, daily banking apps.
Oh, okay.
I think they do that type of thing. Like they, you see deals pop up in your app for fast food or whatever. I think Cardlytics drive a lot of those
Sure.
systems.
Like
That's my very basic understanding.
Like brand promos and stuff like that. Do they do
Yeah.
credit card offerings too, like sign up bonuses and that sort of deal too? Or probably
I've reached my limit of knowledge.
Yeah,
Jason might be able to tell us. Yeah.
He's
Come on,
tapping
Tom.
out.
Come on, Tom.
Exactly.
We're relying on you here. Yeah.
It's been at least a couple of years, and I think I learned that from Jason's podcast, maybe actually. So
Yeah, that sounds familiar. So
yeah.
So I got one here. Buffett was asked, where are we now with the economy, right? And Buffett has all of these businesses that are giving him numbers like weekly, maybe even daily. And he said, one of our retail businesses is down 22% on sales in February from a year ago. And he says, it's a tougher world out there in a great many businesses. I don't know if you guys had any take on this particular snippet.
It'd be interesting to know what type of business. It doesn't surprise me that much that there's at least one getting hit like that. But
yeah, right.
I'm sure he has businesses getting hit a lot harder. Like if his Forest River RV business is anything like Thor or Winnebago, that'll be down more than 20%. But
when you have
to know what it was.
When you have a basket of companies, I think pretty much any time you're going to have someone who's struggling. I would think. I mean, if the whole portfolio is struggling, that might be more indicative. Not to say that that 20% drop isn't significant and might mean something broader, but business is tough. So could just be, a rough month for a variety of reasons. Could be a market thing. Could be, it could be a whole host of things. So I guess the solution is to run for the hills with that information.
Hide your head in the sand.
Yes. Quit. Business is hard.
Quit.
Yeah. Business is hard. People have reminded me of that since I've gone into, about the carpet business and carpet cleaning, not carpet business, but carpet cleaning, steam cleaning. I like the questions about do you have circle of competence with this business? I'm like, that's why I bought a carpet and steam cleaning business and not a rocket science company, but all right.
Yeah, no circle needed.
Because you don't need to.
The circle is
Do I understand how a steam cleaner works?
Yeah, I'm not that deep, but I can turn it on.
I can turn it on.
I can take it apart and put it back together, but I can turn it on.
I can make it suck.
Yeah. I don't know if I can make it happen, but I can hit the button that does that.
There you go.
Yeah. So business is hard though. Even in a simple business, it's still got to you got to do things right, and it's never ending. There's always something you can do. You don't really this is something Alex Hormozy, the entrepreneur content guy, he mentions that you don't really win in business. You just keep playing and keep playing. Just like you don't win in marriage.
You survive.
You keep playing. Right. You survive. It's the game. You play the game, and it just never ends. So there's no real end game to it, unless you just quit, I guess, which would mean winding up or selling or whatever. But for business, it just never stops. Stuff's always changing. You've always got competition coming for you, so it's tough.
On that optimistic note, yeah.
I don't want to call it that pessimistic, but it's realistic. It's a game, and if you like the game, then it's fantastic because you never get to stop playing, right? But it's exhausting for most people. So
we speak truth on this channel. Hodo Prime, Costco had a bad report recently. Is Costco not trading at 50 times earnings anymore? Has it actually
36?
Okay, 36.
How modest.
Yeah, how modest.
Where'd Nick Sleep and Mungo bought it in the something with a 1 in front of it though, right?
I'm sure.
I think.
Yep. Not there yet. Okay.
I just like how Munger's always like, oh yeah, it's awesome, but I wouldn't buy it at these ridiculous prices.
Yeah.
That's always his conclusion.
Yep. That's pretty much, it's most going to be that way most of the time for Costco, I think.
Maybe we wrap up with a question from our very own Frank. With Buffett giving, he's in the chat.
Ooh, he's here. Yes.
With Buffett giving the go-ahead for Japan, is now the time to look at a basket of net nets.
I don't know, Frank. You tell me.
Yeah. It sounds like you have an answer.
Yourself
Sounds
up
like you have an answer to that
This
question.
sounds like a setup.
Throw it off the backboard to yourself and slam dunk it. Let's go. That did cross my mind with like we've talked about before with Japanese holdings. A lot of them have really great looking balance sheets, tons of cash, but it just kind of sits there. It's like, what's the catalyst to unlock the value? What are they going to do with that?
Fugazi.
Cash? Yeah, it's Fugazi, it's a Wazi, it's a Woozy, and like you never know what's going to happen. So that's always kind of a turnoff, just given the recent history. But cash was cash, right?
I think that's why Pabrai got out of Japan. You know, he was in a company.
Tired of waiting. Hurry up and wait.
It was just a huge cash drag. It was just sitting there.
Right.
Yeah.
Frank says yes.
Frank.
I think it's fair to always.
He took his assist and threw it down.
Yeah. It was a very, very casual, just off the backboard to himself. No 360s. Yeah. Very, very textbook. I guess he did say look at net nets. I think it's always fair to look if you're interested.
Yeah, well, I saw Jeremy Raper on Twitter right after this whole interview. He was like, "So who do you guys follow for like Japanese special situations?" And like he's trying to build his network of people who are experts in Japan. So that was interesting to see.
Is that the
Jeremy's trying to build it? Did you say?
Jeremy, yeah.
The next hot market, perhaps?
Maybe.
That would be funny.
We're going to get another 1980s Japan bubble after this.
Yeah, right. We get another debt bubble, and then that explodes. Back to it.
I'm curious.
That'd be a fun ride.
Do you guys remember what's one of the holding companies in Japan? I want to see if the price has popped at all recently with this interview from Buffett.
I think I saw something in CNBC that they rose like 6% on the news generally, or something 6%. Like that he increased. That might have been from the last one though. I'm not sure if that was this one or back in 2020. And Frank, continuing his thought, not only because of Buffett, but the general state of the market, find a basket of 10 net nets that are actually growing, have good allocators, and a possible catalyst. I'm not sure what catalyst that would be. Like they're going to make an acquisition or dividend or buyback, something like that.
They're going to actually give you the cash.
A Japanese
roll-up.
Yeah.
Do you want to just show my screen there, Jack? I've got an answer to Brad's question here. Yes. So this is
nice.
These are the 5 companies last year.
Look at you.
That was fast. Show us the ticker.
Did you know I was going to ask this, Tom?
No, I took some screenshots for a video just before, so
still
gotcha.
So this is the last 3 years returns on each.
Can you go like 3 months? I'm curious what it looks like just since this interview. There's quite a bit of a pop there, isn't there?
Yeah, not sure. Can you go shorter than 3 months?
Yeah, looks like you can.
That's
over 0.12 years.
Since the start of March.
Well, the interview was just 2 days ago, I think. So.
Oh, dang. Can we go?
I don't know if we can see.
Yeah.
Well,
what is 0.01
come
years?
on.
Is that a day?
Upward trend there.
There you go. Up and to the right.
Yep.
Very nice.
Well, yeah, Frank, I look forward to your basket of 10 net nets in Japan. That's going to be.
To clarify, he hasn't said he has done that or will do it, but he is looking.
Yes.
Or that he would look.
I'm confident we're going to see a Twitter thread from Frank on Japanese net nets. And I look forward to that.
Any final thoughts to wrap up here?
I mean, Jason's last. I mean, it's a perfect way to send off here.
How would I make Frank tap rear naked or knee bar?
Here we go. We got an answer.
Frank responds, "That might work, Jason, if you were sleeping and having an unrealistic dream."
Oh, good. I really want to get these two together. Like,
yes,
you know,
at the Berkshire meeting, it'd be great if they'd be coming, but you know,
next year.
I'll be happy to hang out with other people that aren't you, but so that'll be what happens. But anyways, with that dose of savagery, we will end today's stream. And thank you everyone for stopping by. If you haven't already, be sure to subscribe, hit the like button as well to boost our ego, and check out the Discord while you're at it. And if you don't want to check out the Discord, leave us a comment and telling us why you wouldn't want to do that, because that would also go a long way towards helping the channel. Check out those links to ShareSite and Seeking Alpha as well for discounts on those fabulous products that we often use ourselves partly for the lead up to the show, or we need to track our punch card portfolio more often. Maybe next episode we'll do a nice punch card portfolio update, see what the damage is, and yeah, we can go from there. So thanks, everyone. We'll see you all next time.
Thanks for tuning in to Punch Card Investing. The contents of this show should not be used as investment advice or as a recommendation to invest in a particular security. Please consult with a licensed investment advisor if you need investment advice. All investments carry risk and the potential for monetary loss. Thank you, and see you next week.